Hello YouTube stackers, this is ST with Silver Stacking 101. I'm coming to you today with a video on capital gains taxes and how it relates to silver transactions. This video is in response to a question I received from two different viewers, Shep and Trade. Thank you for submitting your questions. If you need to reach me, my email is stsilverstacker@gmail.com. I will try to put the email in the description on this video. If you are a resident of a country other than the United States, this video will not apply to you. This is for United States tax law. Check back Wednesday and check back Saturday. Wednesday's video will be a tax scam video, but it'll be funny. And next Saturday, we're going to get back on the economics of silver stacking. Also, I'm not born yesterday. I know a lot of transactions that involve silver are done with cash with no paperwork. Guys, I'm just telling you the law the way it is. Report it. And I'll do a video later why and how you can be caught if you use certain means to sell your things. You think you're not going to get caught. The IRS is smarter than what you give them credit for. Okay. Any economic transaction you engage in to make money, you have a partner. This is a bad partner. The partner doesn't contribute to work. The partner doesn't contribute to capital. The partner does not cover losses incurred. However, the partner is there with the handout first for their share of the profit. That partner is the United States government. It sucks. And how do they justify this? You remember Obama? If you have a business, you didn't build that. Someone else built that. Well, I built the business I had to pay a lot of money for when I sold. I had to pay a lot of money in taxes, let me put it that way. It's funny, I don't remember anybody else getting there at 5 o'clock in the morning during peak season and leaving at 10 at night. I didn't see anybody else doing it. I just saw me doing it. So, yeah, I did build that. Nobody else did. But that logic makes it easier for them to put their hand out to take your money. Now, silver is a capital gains transaction when sold. Now, let's talk about why capital gains transactions are immoral. If you remember from a prior video, I demonstrated that 2 silver dimes in 1960 would buy what $2.09 worth of fiat money would buy today. So the present value of the purchasing power of 2 dimes in 1960 is $2.09. Now, let's assume that we took these 2 dimes, we put them up, we didn't do anything with them. We held these 2 dimes until now. And we sold these 2 dimes for $2.80, $1.40 a dime. Okay, our capital gain is our $2.80 minus the 20 cents that we had in the 2 dimes, so our capital gain is $2.60. Now, silver is different from a lot of other assets as it is treated as a collectible. Now, I have a 1 ounce Engelhard bar. Nobody would consider this 1 ounce bar of silver collectible. It's an ounce of silver. Period. It's a commodity. However, the Internal Revenue Service deems it as a collectible. That means capital gains on silver is taxed at a 28% tax rate. So, on my $2.60, my taxes are 73 cents on that transaction capital gain. That means I have $2.07 left. In 1960, before I saved it, I could buy what is equivalent in today's terms $2.09 worth of goods and services. Today, when I sell them, after capital gains taxes, I could buy $2.07 worth of goods and services. The only entity that made money on this transaction is the government. I have lost 2 cents of economic purchasing power. Now let me go through capital gains, and I'm going to do a little CYA here. This is not to be construed as legal, tax, or accountant advice, because individual situations may vary. It is strongly advised that you seek the services of a competent CPA, tax accountant, or attorney in your particular situation. Little CYA there. So don't come back to sue me because I acted on something ST told me and you had one little variable that threw everything else off. Okay, capital gains. They are reported on a Schedule D on a tax form. That's where you report investments, sales, such as stocks, bonds, mutual funds, real estate, collectibles. Collectibles are taxed at a 28% tax rate, regardless if they're long-term or short-term. They tax the ordinary income tax rate. Long-term and short-term, long-term's 1 year or more from the date it's purchased to date it's sold. Short-term is 1 year or less. Now, one thing we can do is we can pick on a Schedule D which silver we sold. So, if we sell silver dimes, for instance, we can pick, because it is a collectible, which dimes we sold. Naturally, we're going to pick the dimes we had the most money in, not the dimes that came in first. Ordinarily on a Schedule D, when you have multiple like-kind items, such as shares of a single stock, your order you sell them in is called FIFO. That is not the first 2 digits to Mike Tyson's telephone number. That's kind of funny. FIFO, first in, first out. So if you buy 100 shares, the next month buy 200 shares, the next month buy 300 shares, a year and a half later you sell 150 shares, it's 100 from the first month, and then the 50 from the second month comes out, and then you compute your basis on those. So, being a collectible, we get to pick which batch of silver we sold, and we're going to pick, obviously, the highest priced silver. A couple other issues with capital gains. If someone gifts you the silver, your basis in the silver, what you got in it, is the fair market value at the time you received the gift. So if your uncle wants to shed some stuff, he's going to give you $5,000 worth of silver. You turn around and sell it a year later for $5,500. Your gain's only going to be $500. Same thing with inheritance. It is the fair market value when you inherit the property is your basis. So a little break there. Um, Ordinarily, capital gains taxes are looked at by society as, hey, this is great. You get a lower rate, but we don't index them to to inflation. And that is where the example I used for the two silver dimes from 1960 shows how much that sucks. Because if we indexed it to inflation, you wouldn't have to pay the 73 cents for the silver, or for the taxes on the silver. So I hope this helped a little bit. Capital gains taxes are a broad subject. I'm just trying to pick out the elements to go over without speak. I can't spend 3, 4, or 5 hours here going through all the nuances of capital gains. Now, again, this is not turning into a tax channel. The next 2 laid back Wednesdays, I'm going to do stuff on tax scams. They're funny. Some of the things are sad that people pull it and people suffer for it, but it's funny as well. Next Saturday, a week from today, I'm going to address, is there a silver shortage? There's not. Spoiler alert. Questions, comments, email me, stsilverstacker@gmail.com, or comment on this video. Subscribe if you haven't. God bless you. Goodbye.